Welcome to Themes Trading. We're here with Peter Rosenstreich, Head of Market Strategy at Swissquote. Now, Peter, you just landed from China. We're going to hear all about that because still a very relevant play for you in the investment world. But first of all, let's just talk about what's happening in the world. Brexit.
Yeah.
Lots of possible outcomes there. Is it likely we're not going to see this deal happen before?
It's quite dizzying just trying, as an analyst, trying to keep up with all the open scenarios. So the high probability trade is that the UK leaves the EU with some type of light agreement. But there are so many variables. Theresa May can go for a hard Brexit, call a new referendum, call a new election, come up with a plan B, which is probably still likely to be her original plan A. The potentials is just massive. So it's extremely difficult to try and figure out what the next phase is when basically extreme flexibility and everything is still on the table.
Mind-boggling how it's unfolded and still not there. So it's like shooting in the dark for you, Peter.
Agreed. If you're not in the sterling assets, if you're not in the FTSE, you don't have to be in the FTSE. I would stay completely away from the EU, the UK at this current situation.
Let's turn to the US, a government shutdown there. Now, you see that as actually fairly significant for the economy at large. It actually weakens one of the links that has actually, enabled a bright economy over the last months and years.
Absolutely. And, I think when they first started this Pelosi, Schumer, Trump shutdown, there wasn't going to be much sort of spillover. But what we saw very clearly is there was a very sharp drop in consumer confidence. And consumer spending has sort of drives the U.S. economy. It's about 70%. It's been one of the reasons why the U.S. Growth has sort of been so resilient. And if we start seeing a further erosion of confidence and then potentially consumer spending, this could be extremely negative for the U.S. economy.
This is all down to hundreds of thousands of jobs, currently not being paid.
Well, that's it. So the 800,000 workers are going with their second month without having a paycheck. In addition, there is the idea that some of them are working without pay, which is sort of unconstitutional, if you ask me. I'm not a constitutional lawyer, but I don't think that sounds fair. So this is the idea that the broken American political system is starting to have a real effect on the economy, and that is going to be what investors are watching in 2019.
OK, one to watch. Now let's turn to Europe. Germany, leading indicators there also sort of signaling that all is not well.
So the German economy printed about 1.5 GDP growth, and that's probably the slowest it's been growing for the last 5 years. And that has a lot to do with the trade war and global growth slowdown, as well as sort of the manufacturing and car sector that hasn't been sort of as robust as it has in the past. China is Germany's third largest export market, and if they're slowing and they're not buying cars from Germany, it's going to have a spillover effect in the largest European economy as well. So people are watching that very clearly. Now, I would say that we need to take it with a little bit of a pinch of salt. I think there's an opportunity for Germany to recover or at least stabilize. One of the big pullbacks in growth was sort of the growth of sort of the consumer spending, which came down significantly. And there's a likelihood that surge lower is going to reverse, and we could see a slight pickup in Germany. So I would be sort of remiss to say that, it's all negative moving forward in Europe.
And keeping in mind that the world, the economy is sort of slowing in terms of growth as well. So in terms of putting that in the balance?
Agreed. I think, you have to, take that into larger context. And I think that's a very good point, that we are expecting a sort of a cyclical global slowdown. So we should expect places like Germany that are defined by the export market to start seeing a little bit of a faster slowdown than other places that perhaps may have a stronger domestic view. So none of the deceleration is sort of scary in our mind. It's something to watch. But, overall, I think things are quite well.
You mentioned the US, and of course we know about trade war and tariffs of 2018, still spilling over into 2019. You've also, mentioned that we are experiencing a slowdown. What is happening in China? Because you've just got back from China. This sort of trade tensions, has it had an impact on the economy, would you say that?
It has, and it is quite worrisome. First of all, here is a chart of the Shanghai Composite, 12-month. You can see that there was a significant revaluation throughout the year, especially of high-flying internet stocks, as traders started looking at the high valuations and potential earning growth in a slower global backdrop and a slower domestically sort of challenged China.
And why is this? Why has this happened?
Well, part of it is sort of just a general sort of shifting from a export-driven Chinese economy to sort of a domestic-led economy. And the consumer in China really has not shown up as quickly as the government officials had wanted. And that's why we're seeing about 6.6% GDP growth. But remember, for an economy the size of China, that pace of growth is still pretty substantial. So I think we were starting to see some real opportunities now that China's economy has stabilized. The People's Bank of China is now injecting liquidity, opening up sort of the credit credit spigots to try to push growth back into play. And I think that would be good for investors.
And when we think of China, I mean, as the everyday person, we do think of China and Chinese spending and consuming. I mean, was that the picture that you were feeling on the ground there?
You know, they're probably a little less sort of consumer driven. I think they're probably more sort of careful with their money than we originally had anticipated. We thought sort of, if we gave them a lot of discretion with their capital, that they would start buying into sort of this consumer class. And it doesn't seem to be going quite as many people had planned, including the government themselves.
Nonetheless, you are a big fan of China. You do believe it in the sense of an alternative play when it comes to investing.
I mean, just walking around the streets of Hong Kong, the adaptation of technology in daily life in that part of the world is extraordinary. We were saying that, the Chinese sort of mainlanders and Hong Kongese, they don't even bring wallets around anymore. Everything is run on their phone, for everything from WePay or sort of the payment systems to how they send mail. It's extraordinary.
And we in the West think we're constantly online, but these guys are just using it in every which way.
Adaptation for technology in Asia has been an extraordinarily fast mover. I think more than the market had realized, and sort of jumped a lot of the Western technology.
And of course, China online is a key theme of yours. Maybe just walk us through in terms of what do you mean when you say China online?
So, I mean, clearly we see a very clear, sort of revaluation in high-flying Chinese internet stocks as people started pricing in slower forward earnings, and rightly so. Things were slowing down. But we've gotten to a place where the Chinese economy, in our view, is stabilizing. We have the People's Bank of China putting stimulus. There's going to be government fiscal stimulus in as well. So we believe we're probably at a plateau point for the economy.
This presence online, this consuming online, be it for goods or services, gaming, you name it, music.
Stopped. I mean, it has slowed down significantly, but, it's still sort of evolving and changing and being used within the daily life. And we think that even if there is a significant slowdown in growth, people will still use their pennies to access the internet, to use the internet, then give up sort of larger purchases. So within their discretionary spending, they'll still use and pay for sort of online businesses.
Now, you highlighted this theme towards the end of last year, sort of end of summer. You mentioned the Tencent, the JD.com. Still a firm believer in this theme, and it is still a good entry point, you believe?
Yeah, we do so. I mean, one of the stocks that we're looking at is with JD.com. It's one of the largest internet plays. It went from about a 40% revenue growth, so lightning fast, a massive number, to about a 20% revenue growth, which cut valuations almost by half. But remember, the PBOC is putting stimulus. People are still spending online. We expect that JD.com's earnings will really come online this year and be quite resilient.
And of course, Tencent really is a leader, a global leader, actually, with the following it has.
Tencent has something that I think is extraordinary, that only one or two companies in the world have. They have a user base of over 1 billion people. And rather than channel it in one type of product, they have WeChat, they have movies, they have mobile games, they have music streaming. So they're able to use that sort of massive ecosystem to find revenue sources in a variety of different structures. So that, and the other thing I would say is that 50% of the people that work at Tencent are in research and design. So they're constantly looking at ways to sort of exploit that 1 billion user base.
Take a listen to this, Peter. Very few combine instant messaging, social media and mobile payment as successfully as Tencent's app WeChat. Tencent is a $500 billion technology firm run by China's wealthiest man, Pony Ma. Besides WeChat, Tencent provides streaming music, dwarfing Spotify and Apple in terms of monthly users, is the most valuable gaming company in the world, and is one of the biggest investment corporations globally, with stakes in American giants Tesla and gaming company Activision Blizzard, Snapchat and Sweden's Spotify. People often try to compare Chinese tech companies to a US equivalent, but there is no US equivalent to Tencent. With little mainstream competition at home where Facebook is banned, it dominates in a market of over 1 billion people. That means brands everywhere are trying to ensure that their products are promoted, liked and bought online in China and abroad.
It's very simple. We have to adapt our platforms to the customer. If the customer is on WeChat, why shouldn't we go there?
In November 2017, Tencent partnered with Germany's payments firm Wirecard to allow EU retailers to accept WeChat as a payment option.
I think going to the shop to see the watches first is good. Then buy them on the WeChat. If the price is cheaper, of course that's better.
WeChat is not only a platform for social network, but it's also very good because you can add a lot of videos and a lot of information. So our customer, they like this emotional and informative part very much.
Tencent is not without its issues. AOL accused it of copyright infringement over its first messaging service, OICQ, later named QQ. Ratings agencies cut it from their antivirus rankings following accusations over cheating. Chinese media complained that children were getting addicted to the company's games, and it was about to buy WhatsApp before Facebook swooped in and got it instead. Moreover, some are still afraid that what they're purchasing online may not turn out to be the real deal.
Maybe at the beginning I will see what kind of collections that are available through the WeChat, but after maybe I will come to shops. There are a lot of different collections that I can select. And also just a little bit afraid that I could buy fake ones from the WeChat platform.
WeChat Pay is used by Chinese tourists in Europe, but is yet to rival the likes of Apple Pay or its large Chinese competitor Alipay.
Whoever has a doubt about China should immediately try to think again, because it is just phenomenal what will happen.
Peter, China online, clearly big in China, but what happens when you're outside of China and you're not Chinese? Are we still comfortable using the Alibabas and the WePays?
Well, I think this is where it becomes a little more challenging. You know, if you're trying to buy something on Alibaba here in Switzerland, the first thing that you're going to run into is how you actually pay for the product, which I know many payment systems won't allow you to send capital to China. So that needs to work out. But, you know, in the end, I think it will have an enormous sort of global presence, but some of the finer tuning needs to happen.
And maybe across borders isn't necessary because it's such a great business already in its own right at home.
I think for the next few years, you know, looking at domestic opportunities, companies that take advantage of what's happening in China is probably better than exposing yourselves to sort of global trade tensions where things can change overnight.
Lovely, Peter. Thank you very much. And thank you to you for watching. Happy themes trading.